Hi and welcome to the Trades Coach Academy sample series. Now, the idea of this series of video lessons is just to give you a bit of a snapshot of some of the content that's available in the Trades Coach Academy course proper. I hope you get some value out of these lessons and decide to join the course, but even if you don't, I encourage you please to take these lessons and implement them into your business, because they will make a fundamental difference to the bottom line amount of profit that your business will generate for you. So today's project is entitled Markup versus Margin, and the subtitle there, the easiest extra profit that you'll ever make. And that's certainly true. Unfortunately, the converse is also true. Get this wrong or don't understand this concept properly, and a significant chunk of your net profit can just vanish from your business, and the kind of returns that you think that jobs will be generating for you just won't be reflected in the accounting numbers that return from your accountant or your accounting system, and certainly won't be reflected in the amount of money that's sitting in your bank account. So I don't know if you can feel sympathy or empathy with this guy on the screen here. You do what you think is right as far as costing your jobs, and you do as good a job as possible in the delivery of those jobs. But when you get your accounts from your accountant, or your bookkeeper produces some monthly figures for you, or you do some reports yourself out of the system, the amount of money that is either A, in your bank account, or B, showing as a profit on your bottom line just doesn't seem to match up to your expectations when you originally did the estimation or quote at the very beginning of the whole process. So why is that? Well, there's a wide range of reasons why there is a bit of a disconnect between your expected profit on jobs and actually what shows up on the bottom line and what shows up in your bank account. There is a number of projects that we'll be looking at during the Trades Coach Academy course proper that looks at the various aspects of where perhaps profit is leaking out of your business and the best ways to plug those leaks and build better overall profitability in the business. But today, the one we're going to be focusing on is this concept of markup versus margin. And I do see this with quite a few clients when I first start to deal with them, that there is this misunderstanding that when you're trying to aim at a profit figure, just by adding that profit figure onto your direct costs to try and figure out what your selling price is, will not give you, or will not result in that profit figure being achieved at the end of the day. So how does all that kind of work? Well, the best way I can illustrate it to you really is just by way of example. And I've got a very, very simple example here to run through. It's certainly an oversimplification of probably what goes into costing a job, but it's really just used to illustrate the point. So in our simple example here, we've got $5,000 worth of direct costs that are going into a job. Now, your direct costs are all of those costs that are chargeable to a client. So principally they're going to be all the direct labor costs of actually delivering the job, the materials that go into the job, and if you've got subcontractors or equipment hire, all those sort of things, anything that you look to charge on to a client or charge into the overall selling price of that job. It's not the overhead costs, which is the cost of your phone and your running the vehicles and rent to the office and such like. Those are the overheads of the business. We'll deal with those later. So, but as far as direct costs into the job, we have $5,000, and we have this target gross profit figure of 20%. Now, you may or may not even have a target figure in your mind, but let's just say for this example that your accountant has told you that you should be trying to hit a 20% gross margin or gross profit figure for your business. So the typical way that that figure is used to calculate the sales price is that people take their direct costs and then they add on their this profit percentage figure, and that gives them the sale price. So in our example, we've got $5,000 worth of costs. We've added on our 20% profit, and that gives a sales price of $6,000. Great. Okay. So is that going to give us our? Will that result in a 20% gross profit and keep our accountant happy? So let's assume we've done the job now. Okay, and now we're accounting back at the end of the year or end of the job as to how much gross profit did that job create. So the calculation to get to gross profit, which is the same way that you lay out your profit and loss statement from the top down, is that you take your sale price, you deduct off your direct costs. That will give you your gross profit in dollar terms. But what we're trying to get here is a percentage figure. So in order to get a percentage figure for what that gross profit is, you then divide that again by the sales price, and that will give you your gross profit percentage rate. So in our example, there's our $6,000 sale price minus the $5,000 direct costs, and then we divide that again by the sale price, $6,000, to get our profit percentage figure. The gross profit in dollar terms, $6,000 minus $5,000, $1,000, divided by the $6,000 sale price, gives us our gross profit percentage of only 16.67%, not the 20% that we had hoped for. So by misunderstanding the concept of margin versus markup, 3.3% of potential profit has been lost, and that's hasn't been lost because the job's been done wrong. That's just been lost because the job has been priced wrong before you even started to lift a stick of timber. And in many small businesses, that 3.3% profit could represent half of the net profit that's coming out of the business. So, it can have significant effects on the bottom line of a business. So, helpful tip here, remember, markup does not equal margin. Markup does not equal margin. So, what's the solution? So we need to really review the way that you cost the jobs or calculate what that sale price is. So a good formula or a formula to use as a ready reckoner for what the sale price should be is that you take your direct costs and you divide that by 1 minus the target profit percentage that you're looking to achieve, and that's expressed as a decimal, not as a percentage. So going back to our example, we have our $5,000 direct costs here that we've added all up, and we divide that by 0.8. So 0.8 is 1 minus 0.2, which is that 20% gross profit expressed as a decimal. So our revised sale price is not $6,000, but $6,250. So is that going to give us our 20%? Let's run it through the profit calculation formula as a check. Remember, gross profit is the sale price minus direct costs, 6,250, the new sale price, minus 5,000, divided by the sale price again. So the gross profit in dollar terms is now 1,250 divided by 6,250, and if my maths is correct, there's our 20% target gross profit percentage that we need. So use that formula, run through this lesson again, write it down, get some of your previous jobs and run them through it. The other way, obviously, is there's a handy sort of cheat sheet guide there, which I have included on the right hand side of the screen here for you to download. So take some action out of this lesson. Run it through again, see if you can get the concepts right. Write stuff down on a piece of paper. It's all very well reading a screen, but it's not until you actually do the figures and perhaps it starts to sink in. So take actions here, download that cheat sheet, and have that at your elbow when you're doing some of your costings from now on. And it just gives you a feel for the kind of markups that you do need to apply to overall to your direct costs in order to hit that magic number. And in the next project lesson that we're going to do here, we are going to look at an alternative sort of costing system that you can run alongside what you're probably currently already doing, just as a double check, I suppose, in order to make sure that after you've priced a job up through the traditional way that you do, you run through quickly a secondary costing system just to see whether you are going to hit that target gross profit percentage figure, because that is a key number in your business, and we'll learn more about that in the course proper. So hope that you've found that interesting, and that's going to help you to achieve higher gross profits out of your jobs. If there'll be another lesson coming out in the next sort of day or so, look forward to seeing you there. If you want to jump ahead, and if you think this is definitely something you want to find out more about, there's a link there on the right hand side of the page also that will take you to the it's got an information page, I guess, about the Trades Coach Academy course proper, and on that page you'll find more information about how long the course runs for, kind of what it contains, how much it costs, is it for you or isn't it for you, and if it sounds like it's yes, it's something that's you want to jump onto, fantastic, you'll be able to go through to the shopping cart there and start the course right away, and certainly look forward to helping you in the future. Meantime, whether you or not you jump onto the course, please implement this lesson into your business, and it will have a profound effect in the amount of profit in your bank and cash in your pocket. So look forward to seeing you in the next lesson.